All right, let's see what we got here. We wanted to see if these were going to all be Form T category, meaning after hours, outside of regular hours rather, and you can see hardly any. So we'll have to figure out what that means. So they sold it off hard, $6. You can see over here. So very few Form T, very few. So we'll just have to figure that out. If these are dark pool trades from Friday afternoon's regular session, now all the way down to $5.88. So all of this is being recorded, and we'll go figure it out. And you see how much activity is going on in the time and sales window compared to the tick. Once this trades a little bit, I'll go and adjust this. I forgot to change this 1 minute chart to from day session to 24-hour. I'll mute the mic. You can see where these algos were fighting each other right here. So real Donnybrook between that $6 and $6.15 level. You can see right there. So you see that just incredibly fast markets right there. Everything just froze up over here on my time and sale. Look at that. Look at that. Look at that Donnybrook. Again, it's in that 6 to 615 range, and then even tighter right there. Now you're seeing all the Form T. Look at this. Look at that. Look at that whole screen of Form T. So, you know, that early huge dump had very, very few Form T trades. It's interesting that the flood of Form T that came in was right here before it turned to the upside out of that range. And very few Form T again. Another big blast of Form T. Here come the smaller trades. Those smaller trades basically slow down time. Think of those sub 100 share size trades as being small cars that pull onto the highway, small slow cars that pull onto the highway and clog up the road, slow everything down. When they sit in between the 100 share plus size, big blast of Form T right there. When they sit in between the 100 share and higher size, they're acting to slow down time, which is a strange concept, but because they're not reflected over here, in essence, they're getting in the way. They're the slow cars clogging up the highway and slowing down the movement in time, the forward progress from left to right. Incredible blast of flat line trading right there. Now look at the Form T come in at the bid. The 606 level. Let's see if at some point during the night they want to play around with their favorite number 666. I'll mute the mic. And again, when you have those sub 100, that I don't know if you guys noticed, but you have the sub 100 size over here. That's when you saw a lot of movement over here in the time and sale window, shifting down multiple lines, but nothing going on over here. You should be seeing, when you see blasts, progress over here, every line, you should see a new line added over here if everything was reflected, which it's not. We know it's the sub 100 shares are not. So your real progress will come when you have blasts of size of 100 shares or more, and then really see you're falling behind again. See this green bar over here on the 1 minute that we're working in this uptrend. So that's very clearly an algorithm. When you see this, it's an algorithm that is in control. Let's do this. So what I like to do is just as if it's a highway with the center line, instead of trying to capture upper band, lower band. Just think of that as a highway, and the car's traveling on either side. And typically what will happen is as long as this algorithm is in complete control, the car will catch back up. You know, think of this as if it's swerving off the side of the road. So you can see right there, somebody broke that algorithm, but that whole section there, you can see it's really the first example we've seen at the tick level where you could clearly see one side in control. And that was from, let's call it 606 up to about the 630. 606 to 630 is where that algo controlled the market. I'll leave that in place. We'll go ahead and lock it, and we'll see if even if we fall way out of range, if it races back up to sort of that same highway, or the center line of that highway. See all those little trades in there. I'll mute the mic. And so again, with this down, up, and then sideways, and then lower low here, that allows this to be a valid trend line. So obviously, if we get a trend jump and then a move to the upside, it'll be interesting to see if the tick tries to catch back up with our highway over here. You see this tremendous burst of volume right here. I mean, relative to the rest of the volume in this tick chart, and it's associated with basically this flat line. So think about in terms of this starting to race up again toward where this other algorithm was completely in control, and then they battle it out and try to prevent it from moving aggressively higher. There's a small wedging volume pattern here that you can see at the 1 minute level. So we should see some a little more volume come in as we come through this collision point right here. Usually picks up a little bit prior. So you see this, that volume spike right there starting to pick up. The 1 minute bar that we're building right now, you can see it rising toward this this yellow downtrend. Actually, that should be even lower. Now that we've got a little tighter view of this thing. Right about, yeah, we should see it. We should see that volume start to pick up. You can see prices been able to rise on really relatively low volume relative to this entire move. So this will be interesting to see if they come in heavy with volume on a potential challenge of this red downtrend line. Let's make that a little thicker. Or if we see the acceleration through that with this volume, you can see we're really moving toward the tip of this apex here. So now here's this algorithm. Here's another algorithm here. You can clearly see. And by algorithm, I mean an algorithm that's winning, that's in control. So yeah. And they're fighting and fighting here. You see how jerky that got. Volume starting to move toward the moment of truth apex. This algorithm wants to challenge higher. So here's your volume breakout right here. Now if we drill down and try to look at the red versus green bar battle on volume, we want to look at this one right here. So that was a red bar of 122,877. So you want to paint through that with a green if you're going to win. So this bar closed out. It didn't quite make it, I don't think. Nope, 116,879, but it was green. And clearly volume breaking out of this wedge. If you can paint through this 122,877 red bar with a green bar, bulls clearly winning and setting themselves up to challenge that downtrend line there. So even before contact's made, you see the intention of this other algorithm saying, bringing in volume here, saying, nope, put the brakes on. Because what they don't want is they don't want to brake with acceleration. It's almost like a car slowing down before it hits a wall, or hits a barrier. If it's the faster it's moving as it moves into that barrier, the greater the chance that it can blast right through the barrier. So you can see again, you had this little small degree wedging at the tick level, and then it started to rise right there. You saw some rising, and then it cooled down, and then here's where they brought the volume in to really break the spine of that advance. These red bars so far, relatively, tame volume. They're not posting a greater than 122,877. Bulls still have a chance to, grab this thing after this small degree pullback, paint a green bar at 123 or greater. See the bulls come in right here and turn the tick. So we're close enough to where the bulls could still accelerate, but what the bears did there is just slowed this advance down as you approach this potential break of the downtrend, or just the challenge. We'll call it the challenge of the downtrend. Pretty steep trajectory to the upside on that turn, right? Bulls wrestle control away from the bears. Nice volume there, and then you're just really waiting to see if at the 1 minute level they can paint a 1 minute closing bar with volume of 123,000 or greater to paint through this 122,877 red bar. Look at how this volume has calmed down. So it won't take much to push aggressively higher or lower, but you can see this kind of a structure. So you guys will recognize this. Remember, we're looking at this as a tick chart. So you guys recognize the structure. So if the tick can move above this high here, which it's doing right now, then this is a bull crawl. This is not a true expanding megaphone melt-up fractal at the tick degree, because you didn't have the 1, 2, 3, 4, 5, and then price moving, dropping below the 4. So this is just a bull crawl. So here you go on your challenge, still relatively low volume. So we should see some volume come in pretty aggressively on one side or the other on this challenge. Again, if the bulls can paint a green bar of 123,000 shares or greater, they stand a really good chance of successfully breaking through this downtrend. Still a bull crawl at the tick level, and anytime the tick moves above a previous high here, the odds of human nature favor aggressive move back up toward this yellow uptrend line, which is again a bull crawl. Still relatively flat-ish volume. There's a little spike there. Still tame over here. They're executing a bunch of smaller trades over here to slow the movement down from left to right. So you should see a real battleground here as price makes contact with this downtrend. You can see the volume coming in here. Bears defending, slowing down, again, slowing down progress. Remember right here where they put the brakes on, they're putting the brakes on again. But still nothing in volume characteristics that's notable. As a matter of fact, there's another small degree wedge setting up here, you can see. Nesting volume a little bit higher. You can see the volume here at the 5-minute level. Here, I'll expand this for you. So you can see where this was our close on a Friday, and they bomb dropped it, right, from, let's call it 717 level all the way down to the this session low so far, $5.60. And then here we are recovering, moving up toward this downtrend line. You guys can see this volume, you know, compared to the volume here on Friday after hours, all still relatively low volume. But let's take a look at this. Let's take a look at our volume characteristics here. So you can see this spike here, that's red volume of 662,000 shares. Here's the big bomb drop, 996,491. Then it was followed by a green reversal bar of 929,653. So this is the red volume is still in control. If they're able to move above this downtrend line, you know, go through the typical vibration that we usually see, our ABCDE vibration sequence, that would set them up to make a move toward the session high. Let me clean this up a little bit. So I mean, you guys could draw a trend line there, and as a matter of fact, you know, that's what I do for to try to identify hidden retests and vibration and all that. So that would be a trend line. That would be a trend line. This would be a trend line. We'll set this one in place just because this is the hardest to get through. I mean, it's at the highest level of the three that we can draw. So we'll lock that in place. And then the bulls need and nice rising price without a lot of volume. So it's not taking much to regain what they did here at during the first 5 minutes of trading. Move back over to that 1 minute view. So here you go. There we did paint green volume of 132,875. So bulls in control. And still not quite through this wedging volume breakout area yet. So bulls are in really good position actually to successfully move above this downtrend. What the bears need is on the other side of this volume, this wedging collision, right? Downtrending through our nesting resting volume. The bears need a 1 minute red bar of, let's call it 133. So that's what the bears need now. Bulls in control. Bears can wrestle it back here on this challenge of the downtrend if they can paint a red 1 minute closing bar with volume of 133,000 shares or more, because again it paints through this green bar right here that put the bulls in control. And you can see over here at the 5 minute level, still relatively low volume. So we can see some real fireworks up in this area. So here we are, moment of truth, bull versus bear, and in a position to see increasing volume. So if they continue to hand the baton back and forth or ping pong back and forth with each other, it would mean the bears would win out on this volume break by being able to paint through this 132,875 green volume bar. Again, this is what the bears need to turn price down away from a potential break above this downtrend line. What the bulls want to see is either just they want to avoid being painted. They don't have to move back above this 132,875 because they're winning right now. But a very bullish outcome would be to start to paint a second green bar above their 132,875 again. If they're going to ping pong back and forth, red green, it's red's turn, and we'll see here. We can keep an eye on the tick volume. You can see right here where the bears definitely put in a lot of effort right here to turn price lower. Right here, you can see the 1 minute bar curling over. They put a little bit of a tall wick so far on 3 bars in a row here at the 5 minute level. So definitely trying to turn price down. You can see wick contact right there at a bearish candle, and they're trying to work a second bearish candle here. Keep a close eye on this tick volume, and also maybe this small degree downtrend right here. For clues about potential follow through. So you can see we're at that critical point here where the and actually the volume, the nesting or resting volume is even lower. It cooled significantly toward the tail end there. So we're right at the break point right now, and someone's going to become a clear winner here in the next 3 to 5 minutes, I would think. Again, I like to drill down to the next lowest time frame, or in this case, we've got the tick up, so this is the lowest time frame. Usually what I have running is I have a 5 minute, a 3 minute, a 1 minute, a 30 second, and a 15 second. So I'd be diving down into the 30 second, 15 second for clues of who is going to win within this 1 minute bar battle. Because, inside that 1 minute bar, you're building out the 30 second bar, and 2 30 second bars, obviously, and 4 of the 15 second bars. But here's an interesting moment of truth here for the tick. And it's coming right when we're supposed to see a volume breakout. Still relatively low volume at the 5 minute level compared to what went on Friday especially, but even so far tonight here. So watch this volume right here for some indication of whether or not the bears are going to be able to turn price back down off of this very, very small degree tick downtrend line, or if the bulls are going to win with a trend jump and a little vibration here at the trend break. And here you are with your moment of truth as far as a volume breakout. Once we start to see these volume bars start to rise, then again we'll focus on whether or not the bears are able to paint through this bullish 1 minute candle. You can see right here the bulls winning. Vibration at the trend break. Pulls back, but look at the volume compared to this. So far we still have to give the benefit of the doubt to the to the bulls. But again, the really important indication will be what happens with this volume, because you can see it just has moved to the absolute end of the line here. So we should see a pickup of volume here. A 5 minute is still you know, you have to say that that's bearish so far. That definitely that candle. This candle, you know, sort of neutral to bearish, and then they're trying to paint through it here with this red candle. That's a 5 minute, so that candle has another 3 minutes. 3 minutes of trading, and if they can bring in some nice volume here, they can make it look pretty ugly. So far, this rejection right here and this move down is just a nothing burger as far as volume. You still have an impressive looking, you know, relatively speaking, volume here. So there you go again. The bulls come in right there with that and decide to challenge again. This small degree downtrend at the tick level, and then moment of truth. But again, we've drilled down to the tick level, so you can't go any farther down than this right here. And then you keep an eye on what's going on over here. If they want to buy time, they'll drop in a bunch of these little tiny trades that don't show up. Form T at ask. Look at that 5 minute candle. You've got 2 more minutes before that 5 minute candle closes. The bulls would obviously like to probe above that downtrend line and actually close above the wick on that candle. Again, if you're looking strictly at the tick, you have to say that that was a nice attempt by the bulls, another nice attempt by the bulls. The bearish volume, the bearish moves, the pullbacks are, nothing's going on there as far as volume. And they've really delayed this resolution of the volume, so it should start to rise. So you can make an argument that was a B, C, D, E. Look at that volume for the bulls. And then look up at the 1 minute. That volume was your key, and that told you ahead of time. And look what happened. The 5 minute candle broke that high. Look at the volume coming in. And again, the key to all of that, if you were paying attention, came right here and right here. So you knew right there, you had a vibration sequence, and here's a new algorithm that definitely is in control directionally. So in control directionally, and now look at the volume come in at the 1 minute level. So there you go, very clearly the highest volume of this whole series of this uptrend, and so very bullish. And get rid of this note, because now the green volume bar that the bears would have to paint is 177. Is 177. So I'll just update that. Although it doesn't look like they're gonna have any luck. $176,310. And look again right here. So the bull's just absolutely in control. Obviously, you have a break now. What we want to do is we want to go ahead and update the charts in real time. Is what I do, at least, because we know that if this thing were to just take off to the upside, it's going to leave behind a BAM hidden retest level. So I'll go ahead and create vibration yellow for the time being, just so that we know to pay attention to it. But if price were to take off, I'd turn that to magenta, and that way I would know at a glance that it's a hidden retest. You're finally getting some volume to come in. Not tremendous amount, but you're getting some volume to come in at the 5 minute level. So now price curling over. We got our moment of truth here, and so far it's the bulls in charge. You know, this is what the old timers called the kiss back. You know, for me, this is vibration. And the typical minimum vibration sequence is A, B, C, D, E. And again, this is, if you guys follow behavioral analysis, you know that if you're trying to assign sort of a reason for this happening in the real world, this is the period where the bulls and the bears should have to battle it out. So in a healthy market advance, you will hesitate here. This would be the A. The break through the downtrend line is your A. You want to move down through this vibration, which in this case is, let's call it 690. This is going to be exact, but let's just call it 691. And so in a healthy advance, you want to hesitate here and have the battle between the bulls and the bears, which would mean A up, B, C, D, and then the E. You can start to take off again in the uptrend and catch back up with the the trajectory of the move. If price were to just take off, then we'd have to make the note. I'd make the note. This would be a magenta line. This would be a hidden retest, and I'd be looking for contact down the road. Let's double check this volume bar. Yeah, so this is 176,312. And no big surprise as far as the hesitation. It's like I said, for in my approach, my experience, it's healthy to have the battleground take place, so the price doesn't get ahead of itself. You can see here on the tick, tough to tell. That looks like that was a bearish volume bar there. Yeah, here too. can see within these volume spikes that, this is sort of the sign of algorithmic trading. When they, this is a little bit, much of a throwover, but sometimes you'll see exactly the print to crawling up a trend, pulling back, crawling up, pulling back, crawling up, and vice versa to the downside. So it's it just has more of a a structured algorithmic look to it than a natural human emotion that should be a little more erratic. Once we move through this vibration sequence, if it's going to take a little while longer, then I'll create another trend line. A lot of small trades there, so that's what buys time, creates just slows the traffic down. Again, I view any size of 100 shares or greater as cars on the highway, depending whichever direction they're headed, they're whether they're speeding up or slowing down, they are making progress from left to right in time. When you throw in all these little dinky sub 100 size, that's what slows all of this down, stretches the algorithm out in time. You guys see that form T? Look at this. You think look at this. $7.05. $7.09. So here's your battleground. That's what you want to see. You want to see bull versus bear. And then look at all this dinky garbage. And you want to see bull versus bear. So that was really a great example so far. Nothing much going on here volume-wise. So even though this is trending up, this is pretty, nothing much going on there. So that sort of opens up to at least one more move back down. And we'd rather see that because, again, you can make an argument here. Let's see if I trust this trend line. This is not the easiest example. The easiest example of showing vibration on a trend line would have been if you went down, up, and then straight down again. This type of chop creates, multiple downtrend lines, and so this isn't perfectly precise. So I don't personally love the idea of saying that this is a hidden retest level. Although, since you can definitely argue that there hasn't been a full A, B, C, D, E vibration sequence. And then in time, you guys know my rule, which is that typically what happens is you can use this Fibonacci time extension, go to the beginning of the structure, snap this line at the exact point where you see a price break out, and then the typical timing element of the bull versus bear battleground is somewhere between that breakout and this 38%. So, until and unless you see, clear wider swings during the vibration sequence of an A, B, C, D, and then your E, or you spend this amount of time with a vibration sequence, you really have to assume that this is a hidden retest level. And again, we'll call it, 691. Doesn't mean that price can't take off and literally melt up from here. But if it does, then we'll definitely be looking for. It would have broken all the rules as far as a bull versus bear battleground, and so we'd be looking for a retest of this hidden retest at 691 down the road. So let's get rid of that. Let's take a look at volume again. See if this looks real. Let's look at the 5-minute. And so you see the note here that the bulls need volume of 997,000 shares or more to wrestle back control from this bearish first bar. So the best they've been able to do so far on this breakout is 483,406. So we'll keep an eye on that. You can rise on lower volume, but if you want to really make it definitive as far as wrestling back control, the bulls do need to paint that 5-minute bar, 997,000 plus. So you saw your big volume move out of this wedging pattern. Now, the reason why you can't draw a valid downtrend off of wherever this volume spike ends is because you always have to be careful that if you're going to use this method, you always have to be careful that you pay attention to the absolute high volume prints of the nesting or resting volume. So you see this low right here, 19,704. So the reason I can't draw a downtrend right here that's valid and set up a new volume wedging pattern is because until and unless I can print a 1-minute volume bar that's less than 19,704, then if you were to think of this in terms of a line chart, we can't say that this is your point of origin, this is a low, this is a high, and then you made a lower low in price. You'd have to print, again, a 1-minute volume bar less than this one in order to draw that trend line and create a valid wedging pattern. Like you can see, the reason I was able to use this point of origin in this one is because here's your point of origin, here's your lowest nesting or resting volume spike here prior to this peak, and then making a lower low. So now those two peaks are valid. Same thing over here. I was able to do that because of that print right there. Actually, this is not valid. Sometimes these guys monkey around with the volume. I could have sworn I had checked that one. But you guys can see point of origin. This is a 15,345 bar. Then you bounce, then you don't post a lower low. So this was not valid. And either I just missed it because I had 45 minutes of sleep, or they screwed around with volume. Now, I've seen them go back in the data and retroactively change prints on both price bars and volume bars. So who knows? I guess I could go back and review the video. I probably just made a mistake from being tired. But anyway, you guys understand the rules. Point of origin, resting volume, spike low, bounce, lower low. This is valid, and that one worked well. So we're moving to the upside here, and again, there are no specific rules about when a hidden retest level has to be hit at all. We could move to new all-time highs and then come back down to $6.91, a month from now. But until and unless we've moved through the Fibonacci 38% timing element, you have to assume that history tells you that you probably come and make contact. So I'm going to go ahead and leave that. Let me go ahead and leave that in place. But this is basically the period that this could happen. Carries you all the way to about 3:45 in the morning, my time. And I'll go ahead and leave that that fib tool in place. I don't think that's too distracting. Get rid of that box. No new information here that we can draw any conclusions from. You obviously have a full recovery of the beatdown, so I'm sure most people are impressed with that. In other words, this is Friday's close. They bomb drop and full recovery, and now obviously above at 743 above Friday's close, and it hasn't taken a whole lot of volume, so that tells you a lot about the only time I worry about punk volume is after you've broken highs, so you're trending up and your volume just dies. This was more of a sort of capitulation. There was no dying there, and this was them doing what they do. But this is that's a very nice recovery, obviously. The stock's very bullish. I don't care what kind of letters Adam Aaron sends out and et cetera, et cetera. These guys are in deep shit from what I see. The bears, the bad actors. Move this down a little bit. Yeah. Let's see if we can see anything interesting on this tick. Here's some volume coming in for the bears. Yeah, there they go. There they go. So we will go take a peek and see if this is their the moment where we slam back down for the hidden retest at 691. Which is what it looks like it's doing. Okay, there they go. So the bears just painted a 217, 152. Red bar. So they're able to wrestle control away from the bulls. Fits kind of nice with this BAM hidden retest at 691. So now, in order for the bears, bulls to regain control, we need a green. 1 minute bar. Closing volume. Call it 218. Can paint the red bear bar. And all of this back and forth can be part of this ABCDE vibration sequence, and it can all take place in this 38%, timing element, that fib timing element that we have here. Let's go look at the tick. It does look like the 1 minute's gonna come back down to that hidden retest level. But you can clearly see where they decided to wrestle control back. It hasn't taken anything tremendous. It's like these spine snapping moments, when this stuff just really stands out. The rest of this is just, business as usual. But when the algo wants to really say, okay, that's it, I'm about to change trend, they'll come in and they'll bully price. It's real obvious. There's no nuance. There's no, finesse rather. There's no finesse. It's just a punch right in the mouth. Yeah. And see, wick and then just paint straight through 2 bars. That's pretty typical of a reversal that wants to come back down and take care of a hidden retest. And you can see that you also had a red, the 5 minute painted. At the 5 minute level, we have to remember the bears are still in control based on this. Now, in the bigger picture, right, going back to Friday, the bulls are in control, from this bar. But right here, if we want to just talk about this session we're in right now, the bears painted this 996,491 share red bar. Then at least the bulls started to recover with this 483, 406 on that breakout, and climbing 425. Yeah, so they weren't able to surpass that first breakout volume bar right here, and then the bears body slam them with a 676 512. So again, it just looks like you're pulling back for the hidden retest level and to go through the rest of the vibration sequence. So no big surprises, but it is interesting to see it in real time. I usually don't make these videos, so hopefully this is useful. Here's the bulls again, but I would be surprised if they can hold price off of that 691 hidden retest level. I think they probably just wasted some bullets right there, but we'll see. Yeah, so it looks like that's true, that was a waste of their bullets right there, and here we are 9 cents away from this hidden retest level. So what I think I'll probably do is mute the mic, take a little break, let the video continue to capture the screen, but you know, based on history, you usually have another hour or so here of sort of going through this bull versus bear battleground, and so I'm going to mute the mic, take a break, and then I'll be back. guys see that? Look at that. Look at that, would you? So that is what you just saw there. Now, for whatever reason, you have this volume spike, and that's a significant level, which you saw again right here. You know, again, it to me looks like wasted ammunition just based on everything I know about the just normal human emotion and what takes place here. But if you think about it, if you were at war, where do you spend your ammunition and sometimes waste your ammunition? On the battleground. So this is your battleground, bull versus bear battleground, and you know, so it makes sense that you see some of these wonky algorithms that just kind of go temporarily haywire. And we could go back again and look, and you know, try to make some sense of all of this. But you see, remember what I told you about the cars on the highway? So look at this. None of this was interrupted by any of those sub 100 size. Like, see here, you have sub 100 size. Then look at the second the 100 share hits, and it just goes. See how fast you move in time? This is like the Lamborghinis on the highway. And so there are none of those little cars pulling out onto the highway to slow things down. These are the little cars, 3, 1, 30, 73, 79, 2, 30, 10, 1. When they sprinkle those in between, it slows this down. When you have something like a hit like this, I mean, that is just super aggressive. And I honestly can't tell you what advantage there is. You know, it's almost like an algorithm's expecting to see some of the slower cars on the highway, and they just don't appear. And anyway, that's what you get. You make tons of progress in time. I mean, you know, that's tick velocity right there, not up or down, sideways in time. So anyway, that's interesting to me. I'd have to really look closely, and I still might not be able to figure out exactly if it was intentional, if it accomplishes something, or if it is just simply you know, temporarily somebody screwing with the other guy's algo and making it go temporarily haywire. Look at that. Anyway, they're really trying to hold the line there. So this is interesting. We'll see if this plays out a little while longer, or if they're just going to start to rip this to the upside, because it sure looks like they don't want to allow this to move below. So they defended the 705, and they defended the 701 and 705. And again, like I told you, this is not an ideal, perfect trend line, because of this mushy, skippy series of highs here, or series of peaks that lead to the eventual rollover. So, you know, whether or not this is off by 5 cents, and if we're, you know, vibrating right now, technically, you know, this is like not a textbook example, but you get the point. So in other words, let's say this trend line was shifted up just slightly, and that was the vibration level, which is only, you know, 11 cents away. Then we would say A, B, C, D. You know, you're completing the bull versus bear battleground. The only other thing I'd like to see to make it a little bit more typical would be just to spend some more time. So we'll see. Maybe they will be able to jam it down below that 691 and then start to swing a little more violently. But you know, somebody's algo absolutely wants to defend that 701, 705 ish area for the time being. You see that volume cooling off again. Nothing much going on here, nothing much going on over here. So again, we have until about 3:45, so that's an hour from now. It's 2:45 a.m. right now. So we got about another hour of probably of this this kind of trading activity. You also can see that you've got vibration right there too, so another reason to remain sort of trapped in this kind of a range for a while. That's one trend line that I personally would be tracking, and then I'd be tracking this one here. This one, that's a throwaway actually, because you break and then you do a bull crawl up the trend line, and there's just really nothing to learn from that one. So I personally would be focused on this. Let's call this 730. And I'm calling that vibration right out of the gate because there's enough rattle right there. If I drill in a little bit, there's enough rattling going on the trend break to where there's no hidden retest that was left behind. It's really truly vibration. So man, there you go, pretty tight range. I'd actually like to see them, you know, more at even 685 at some point during this bull versus bear battleground, just to see some more violent swings. But so far that's pretty it looks pretty typical based on history. Clean this thing up. It's more like 692 actually. And again, this is far from precise on this particular trend line. There are certain trend lines that are really clean where we can snap a line off the absolute high and then the high of the second peak, and lock it in with this tool and have it be exact. But this isn't one of those situations. Oh wow, they did paint a 220 green. That's interesting. So we were working against this 217,152 red that they painted, and they just painted this green reversal bar right here, 221.16. So again, we just head through this bull versus bear battleground. Everything is acting really normal. This is why I say, you know, when I hear some of the people, especially the younger guys on YouTube, making videos and talking about, you know, the algorithm and like the algorithm and controlling everything and everything being fake and everything being manipulated, you know, I don't know whether there is, you know, an algorithm that controls everything all the time. If there is, though, someone's coded it to look and act like a human, because I can promise you everything that I learned and that I follow, I observed on hourly price bar data in the Dow Jones Industrial Average, you know, going back decades and decades and decades. And That's how Ralph Nelson Elliott, the creator of the Elliott wave theory, created Elliott wave off of the hourly closing prices. So anyway, I've studied price structure going all the way back to the early 1900s, and where you can get the daily and the weekly and the monthly data. And then as soon as the hourly was available, I got that, and it looks the same. It does all of these types of movements. The trend lines were all there. The expanding megaphone melt up and crash fractals were there. Hidden retests were there. Vibration was there. I mean, that's how I came up with this from the 1929 run up, the roaring 20s, and then the crash into the early 30 low, and then also the explosive move up in 1987 into the 86 into the 87 top, and then the 87 crash, and the same thing. They were expanding megaphone crash fractals, the opposite of these melt up fractals I tracked for you guys, and they had left behind hidden retest levels, that indicated crash type targets once price moved back into the expanding pattern and started to accelerate. So anyway, that's my 2 cents on this. And you guys can see this incredibly low volume right here. So this is a super steep. That almost looks ridiculous, right? But that's valid. Wow, it's almost like they just froze the market for a minute there. You see the little tiny trades, you guys. This is the bringing all the tiny cars into the highway. There you go. There's a great example in real time. See how they brought all these little tiny cars into the highway? And so as a result, none of that volume shows up, right? None of those trades show up. We've proven that. None of the sub 100 size trades make their way into the tick. So anyway, you can see here's your high. There's your nesting volume low right there. And actually, it would look more like this. That's absurd, isn't it? But anyway, that's what it would look like. And then there's your volume breakout. This is one of the more bizarre, but there's your volume breakout. And then so far, green is in control right there. And we know green was in control from this reversal bar here. And if you guys are into Japanese candlesticks and reading candlesticks, you recognize that, right? It's obviously very bullish, probing, and then closing upper end of the range and moving up. So anyway, no big surprise, but there's your I'm going to get rid of this just 'cause I'm tired of keeping up with it, but there's your green volume. And then when you move out of the wedging pattern and start to see volume rise, it also is coincident with green volume right there and there. So anyway, we're still in this bull versus bear battleground, but it is interesting that they're just swapping, punch for punch. Green, red, green, red, green, red. Which, fits perfectly with what we're saying here. Bull versus bear battleground. All right, I'm going to mute the mic. We've got a whole hour before we really played out this consolidation zone. And if it tracks regular human nature, and then I'll come back. I'm going to mute the mic and take a break. Hey, I'm back. Looks like we've moved to the bottom end of that little range band here. Let me take a look at volume and see, so you guys can see we're still we still got about 10 minutes or so, but this has worked out. So I'm glad that this is so far there have been a lot of different examples of the nuances of market, human nature, behavioral analysis. So this has actually turned out to be pretty productive video capture. It's about 2 hours and 30 minutes in, but I'm going to post this entire thing. I'll upload this whole thing to YouTube, I think, instead of just my original intention was to divide it into little slivers. So you guys can see that we still have some time remaining here. No matter how we want to slice it, as far as the exact placement of this hidden retest or vibration from this trend break, we're well into it. So we can count this as an A, a B. So now we're looking for a C, D, E, and it can extend past the 38. This is just sort of bare bones minimum. What I usually look for is bare bone minimums A, B, C, D, E as far as the minimum swings, the vibration above and below the vibration level, and then timing element, sort of it to watch it play out during this timing window minimum. It can go on and on and on. It could go on for hours, but I always like to look for sort of minimums. So let's go ahead and mark this up. And we'll say retest hit. We'll go ahead and stub off that hidden retest line and create the vibration. So we'll go 692 vibration. Okay, so yeah, this would be the way I'd count this thing. This would be the A leg. We're in the B leg right now, so then we just need a C, D, E, and like I said, that'll play out whenever it plays out. So let's take a look at volume. So, the volume's obviously increased as we came out of this little bizarre, super steep wedging pattern. But that green volume is still leading, which is really bizarre. So you have this would almost be like an Elliott wave where you look at an irregular correction, either up or down. The fact that you have a leading green bar, but the green bar is way up here and price is undercutting it on this type of spiking volume is, that's the best way I could describe it, as almost like an irregular correction where you're thinking this is just going to turn into a triangle or a flat running correction in Elliott wave. You can see that it's a bear crawl down that trend line. So you're getting your, the old timers again would call this a kiss back, although they really liked, the old timers like to see the break, the kiss back to happen immediately and then to move up. So, that's why I like to call this a bear crawl. Some people just call all of this entire thing a retest of the trend break. The reason I have different terminology as far as bull crawl and bear crawl is for a specific reason, because it just fits in well with giving you some insights. Like if you just call this a retest, like a breakout and a retest, but you also call this a retest, you're really not accounting for, what is it within human emotion and human nature that causes this to happen, as opposed to just this and then off to the races. So, I just try to name things so that we can put them in categories, and it tells us something about what to expect on this side of all of this corrective pullback. So there's that. We know that that's taken care of. We'll just leave this guy over here. We don't really need this timing box anymore, although I'll leave it here, I guess. But we're going to get rid of the fib timing element, timing tool here in a little bit, just to clean this chart up. And then we'll lean more heavily on the volume. Let's take a quick look at the 5-minute and see if there's anything interesting that's happened over here. I don't think so. Okay, there is something interesting that's happened here. So you guys can see this very low. Let me bring this up. Okay, you guys can see this very low nesting volume here. Damn it, this tool does this all the time. You can see that very low nesting volume. I mean, my God, it's 42,246 shares right there. So we have this point of origin high. I don't know why this thing's going to do this to me. We have this point of origin high. Oh, sometimes this software. Point of origin high. You move down into this nesting volume right there. Then you bounce again, and then you go into that super low volume that I just referenced right there on that bar. So I'm going to go ahead and draw this, if this thing will allow me to. I'm going to go ahead and draw this. Okay. This is going to continue to jerk around, but you can see what we're getting at here. So we'll be looking for a volume breakout. This will be interesting too, because this will be a couple hours before the cash market open. You know, it looks like about 4:30ish, something like that. And so this will be interesting to see when the volume starts to rise on the other side of this small degree volume wedging fractal. Whether it's we resolve to the upside or the downside. I'll look for some zones of strength and weakness that have been generated in the 24-hour model, and try to give you guys some ideas about which way I think it'll resolve, and then we'll go from there. But that's useful. That's useful information. At least we have a time period to go look for a volume pattern, and then as we're trying to anticipate what this volume resolution might look like, we'll be drilling down into the 1 minute as well. So here you go. It looks like we've come into the tail end of this timing element, so I'm going to get rid of this fib tool. We know we're done with that, so we've met at least the minimum requirement, and now we know we have a A up and a B down. So now we're looking for a C, D, E, and we can move through just this vibration for this sequence, because again, this is a separate structure. This downtrend line sets up this break that sets up this A, B, C, D, E on 292 vibration. So A, B, we can go like this. We can say C wave coming. Just so you know, I just do note so that if I have to glance up at something, and a lot of this stuff's, we're working on programming, stuff obviously into some of our other Anemoi algos and stuff like that, but I'm showing you sort of how to do this on your own by hand. So sometimes I'll do a note just so I know, it's not that important for a 1 minute chart, but if you've set up some monthly price bar charts and weekly and daily, and you're really tracking some big picture of stocks that you're investing in, not just scalp trading, It's good to have, you know, if you put in the work on a weekend or something like that and you save the chart, it's good to be able to come back a week or a month later and see your notes and just at a glance know, sort of reacquaint yourself with the chart and figure out, you know, where price is in relationship to where you think it's going to end up in the future. So we know that this is the A, B. We need a C at least, right? C, D, E. On this one here, this, you know, you can make an argument there's a little A, B, C, D even, and that this is just the E's wrapping up and that you don't need anything else. You know, I'd rather see some more action around there. The one thing that would allow you to say it's done is to do our little timing tool trick. And the timing element, it could have bare bones minimum been done right here into that, you know, 38% of the move from point of origin to trend break. So, you know, I'm not personally going to be too focused on how many additional swings of vibration happen at that 730 level. I'll leave it up there just because. But this is the one that's more important, and this one definitely needs to be cleaned up and locked. And then we'll keep an eye on this guy. And again, this could fit well with this, you know, the resolution of this volume wedge. And when we get a volume breakout, you know, we could be volume breakout bullish and head up through the C wave. We could be already up through it and the volume breakout on the 5-minute bearish and come back down through for the D wave. So anyway, we'll keep an eye on all that. And then we'll also keep an eye on the 1 minute to see if there are any volume wedging setups. And I think I see one. Yeah. So here's your highest high right here. 168,000. This one's 166. This one's, you can see it's lower. This one is 162. So what we're looking for is highest high point of origin. Where's the lowest low volume of the nesting resting volume? It's a 13,134 share 1 minute bar. Then you have your bounce, does not move above this point of origin high. And then do you have a lower low on the other side? Yes, you do, at 5,396 against 13,134. So this is a restrictive, it's what I call a flat top. So it's a very restrictive setup, meaning in time, you could tell that it would take a lot of time just eyeballing this without even figuring out where it would collide with resting volume way down the road. You can just tell that, as opposed to this, we knew you were going to get resolution very quickly in something like this. The trajectory on these other ones, this is more sort of, you know, normal. You know, not this steep and not this flat, but this particular one is, these are pretty rare actually. And then what I'll end up doing is, if I want to be exact and precise on this, I'll have to lock this in. So at least for the trade station tool, this is the way I have to do this. So I go point of origin 168, 141. I lock that in, so I have my two, you know, point of origin dots set up. And what did I say that was? 141. So that's the first point, and then this one is 166, 269. So that's it. We know I already had locked the, once I identified those two perfect points on the top of those candles, I had already selected lock, so that once I set the, format trend line and got the actual volume number in there, that it would lock, so that I don't have to worry about moving it when I'm jacking around with any of this other stuff. So there's that. Obviously a very flat top, and it's going to take, let's see. Yeah, so it's going to take, assuming that nesting resting volumes, way down here, this thing is projecting way out into the cash session. Let me see if I can open this up for you guys. No, it's not going to let me do that. But, it's safe to say it's way out into the cash session. So what I do now is I'm going to be focusing on, a smaller degree, nesting a fractal inside here. Like this will be the big brother, and we're looking for the little brother. Matter of fact, we already got it. So here's your point of origin high. Here's your low, bounce, lower low. So we can draw one right here. So this at least gives us a opportunity to see some spiking volume and carry us back up to take care of that C wave. And let's do it this way. Lock that in, get rid of that extension, turn it white for no apparent reason, creature of habit, and according to my niece's OCD, which was an interesting comment at the dinner table one night. So this is going to be about, call it, 4 a.m. So it's 3:51 right now. So right here, we should start to see some volume. Volume increasing on the other side of that little, timestamp. And usually it starts early. You guys have seen this. So let's just kind of go like, well, I'll just be neutral. I'll have it in the middle and not guess that it's going to go to the upside. Although that's what I'm thinking is going to happen, just because we need the C wave. So let me readjust this. And I'll reduce this guy. So now what I like to do is, obviously, like I showed you guys earlier, I like to drill down. Yeah, see, here's your volume already starting to come in. We'll see if this thing can close a green bar and start to move up. But I like to come down here and start to look for hints at the tick level of a possible reversal. This one's kind of inconclusive. That's more like selling. This is clearly looks like a reversal buy type of setup. So let me get rid of this one, and we'll see if they can build on the volume here and start to resolve this thing to the upside. Let's go look for some of the other and see what's been going on. Just the pullback low here. Okay, so in the tick, that's the pullback low. This was this battle we talked about earlier before I took a break about an hour ago. This 705, 706 level that was so important and brought in some really wonky algo battles. So this is a low so far of this entire move. Let's see if it posts a lower low. And let's see if we can see some reversal volume come in. This is kind of obviously pretty quiet. You can make an argument for a small degree wedge there. So let's see if we can't start to pick up volume on on the other side of this. That looks like selling. This looks like buying. So we'll see if we start to increase volume here at the tick level and maybe curl up. You can see here we're getting closer to the period of time when we're expecting, so 4 more minutes, and we're expecting volume to increase at the 1 minute. Well, there you go. there's your answer. There's your answer. Let's see what that was. 100. What the hell was that? 35.9. So timestamp on that's going to be 3:54:52. Let's go look at that. 3:54:52. Yeah, there it is. Yeah, see, 35.9. Right there. Right there, 35,900. 3:54:52. So they're trying to turn this thing at the tick level, and we'll see if they're successful. You can see the volume starting to rise here as we approach the apex of this, nesting, resting collision of the downtrend to the nesting, resting volume. We know over here at the 5-minute level that we don't expect volume to increase. Here's another big volume bar, but they're really fighting it out here. So something's going on right here. There's somebody big fighting right in here. So we already know that we're not going to expect to see a volume increase to the 5-minute price bar level until about 4:35. So it's 3:56 right now. But so that'll be 2 hours prior to the cash session open. So we'll see what happens here with these two people slugging it out. Okay, you see them slow down. Here's the little cars on the highway I talk about. Look at these. Look at all these guys. And so they're trying to get in the way of speed and progress here. Relatively low volume here as price moves down to the pullback low in the tick, which is this horizontal bar down here. Matter of fact, let me change that up. Okay, there's some fast market activity right there. So they came in and tried to slam it through the low, which they accomplished. So still no volume here though. So we're due for volume to be increasing at the 1-minute level, and look what they did with that big bar right there. I mean, it looks like a big bearish bar, but nothing going on here. The volume's actually slowly. And remember what I said about when these tops are so perfect like that it's just the clear sign that it's just totally phony. I mean, it's an algorithm. It's not that's not human nature posting this perfect volume spikes to successively just slightly lower low right around that little small degree downtrend there in the blue. So totally unnatural. Let's see if this isn't just a flush prior to a reversal. The volume's starting to pick up here, so we're about to see, I would say, something more. Look at that burst. Look at that burst. So this is odd that they weren't able to reverse here. I mean, you guys see this at ask. Maybe I got a lag here in my system. What's going on? Wow. Wow. This is that was some tremendous amount of volume there. I mean, of activity, the velocity. Wow. See, so that was literally, you have this reversal and this entire time and sales screen completely froze. You saw it lock up. So now we'll look over here and see if this is a big reversal bar on this volume. I'm going to readjust this to the session, not the session low, but the pullback low for that tick. So, and a lot of times what you'll notice if you guys follow things down to this granularity is when it looks really obvious that you're about to get a trend reversal, the algorithm will wipe through stops in the opposite direction first because they want to go seek out, liquidity, and they're about to take it in the other direction. So, they'll typically run through stops. You'll see, incredible velocity in the prints over here, to the point where you saw it completely locked up my screen. Now this is a computer I use for public stuff, so it's not crazy fast with tons of memory like my other computers, but still, apples to apples, everything has been running pretty normally for a number, let's see, we're going on 3 hours exactly right now, and then we just saw that freeze up. So here you go. Here's a really tall volume bar here now, and we're up against what would be resistance. Remember this flat top pattern here? So unless something really crazy is about to happen to where this flat top becomes sort of like, resistance becomes support, this is typical that we just saw that bar rejected down off. But you can see it's 183,423 green. So let's go look at these. This was a 168 green, 166 red, 162 red. So basically this has painted through all the previous. It has the look of a price reversal for the time being. And then remember, down in this area we had that just tremendous blast of speed, of trades without these little cars on the highway interrupting it. When you just see all 100 share plus and just rapid fire, that's what causes that tremendous speed and movement of this tick from left to right in time. And then these are the little cars on the highway that clog the road up, that they purposely insert in there. So real battleground here. And whoa, look at this. Okay, so now they just painted through that with a red. So 189,291. This is a big boy battle right here. This is a big boy battle. Okay, let's take a look here. Still just kind of a bear crawl so far. New pullback low in the tick. And right there is where they came in and decided to run that. This is what you'll find at the tick level when you have a, wow, here they come again. So this other algo tried to put in a reversal. You saw this screen freeze there. So this is the way, when you see a really intense bar like that, underneath the surface you'll see a very clear angle in a tight channel like that, and that's, you know, that's the just the blast bomb drop algo. And then it happens in the opposite direction for a big green bar. But that right there, that red bar that you see at that 1 minute level, that was what caused that velocity and the size of that 1 minute candle is right here, that algo they ran. And look at the volume. You know, there aren't really big spikes there, but it's just persistent pounding and rapid fire, and they ran right through those stops again. So again, this worked. The volume did increase on the other side of this nesting, resting volume collision with the downtrend. We did reject off of this because this flat top is like I said, going to be sort of with us and haunting us and rejecting us off of the, you know, call it the 160 to, you know, 200 share per 1 minute bar size. It's going to be wanting to turn volume back down every time it tries to spike up there, until this thing starts to, it's going to take probably an hour or two. Matter of fact, this might sync up really nicely with this expected breakout in the 5 minute volume, which is more like 4:35. Actually, is that only an hour from now? What's going on here? That kind of snuck up on us. So that's 4:35. So we only have a half hour here. This will be really interesting, because if we're going to get a volume breakout at the 5 minute level, it should, be able to bring in, decent sized volume, because it's the gorilla in the room compared to at least this guy when you compare the 1 to the 5. So if this one starts to see a volume breakout in 30 minutes or so, in 30 minutes or so, we could actually see a volume jump above this flat top yellow downtrending line here. We'll have to see. Now in the 1 minute, we're still looking for, remember, this is still just a B wave of this vibration. So if I tighten the chart up, and we've got this downtrend, right? And we broke through it. That was your A. We knew we needed that hidden retest at 692 at some point. We got that, but now we're getting a big follow through and a bear crawl down this red downtrend line. But this is the A, this is the B. So we still need the C to 692. So we're still looking for a reversal and then a sharp move right back up again. It looks like that'll probably correspond with this rising volume out of this 5 minute wedge setup. So again, about 30 minutes to go on that one. And I'm going to spread this back out a little bit. Matter of fact, we've got another, fractal that we need to be able to monitor. What's interesting about this to my eye is, the very flat tops on these two wedge volume fractals have a corrective look to them. They don't have a trending look, they have a corrective look. So that also fits well with this idea of this A, B, C, D, E, that, we still need to spend time up here at, 692 or 730. So this will be interesting. We'll know in about 30 minutes whether that's correct, or if they're going to try to run back through this session low. If they were going to run through the session low, and if they were going to continue to do a bear crawl down this trend line, we know this volume breakout supposed to happen at 4:30. So if I just take this and say, okay, this is what 4:30 looks like. Obviously, if price is just bear crawling down this trend line, then you're nowhere near breaking through this session low, and you'd have sort of a low right in there would be sort of the bullseye that I'd set up. I'm going to get rid of this because we already had the volume increase that worked right here, breaking this wedging fractal down to that nesting resting. So really, we'll see if we get another steep wedge set up in front of 4:30 in the morning, but really this is going to be our focus. We're going to bounce over here. And in the same way we were kind of cheating and looking at the tick to try to see what the resolution might be to the 1 minute, we're going to cheat on the 1 minute to see if we can see what the resolution might be in the 5 minute. So I always just drop down one time frame lower to sort of cheat. And I only have the 1 minute and the 5 here. Usually I'm running a 5 minute, a 3 minute, and then a 1 minute. And then also in between these two, I'm running a 30-second and a 15-second model. So it would be too busy on this view. So this is good enough. But you guys get the idea. I just like to drop down one level if I want to cheat and try to front run or get a front running signal intra bar on a 1 minute or on a 5. So here's cheat with the tick to front run intra bar on a 1 minute reversal. You cheat with the 1 minute to get a intra bar reversal, an early intra bar reversal take on the 5 minute. I'm going to mute the mic, take a little break, and then so it's 4:11 a.m. right now. I'll step back up and turn the mic back on as we approach this 4:35. Now, we usually break out, a little early, so we might break out while I'm away, but you guys kind of know what we're looking for here. Now, if they're super aggressive, obviously, and they want to try to hammer this thing, then they most likely do it into 4:30 or just in front of it, and they would try to go wipe stops right here, but then most likely reverse in the opposite direction. I actually don't think they'll be able to make a run at that low, but we'll see. Let's put this over here. I'm going to mute the mic and I'll let you guys watch this. Okay, so this is interesting. You started to get that nice looking move to the upside. This has a really artificial look to it, but let's see how this plays out. Big red bar here. 294.032. But you had green, so you see how it has that sort of a really artificial look to it, to my eye at least. Let's see, I think this was a green. Yeah, see, so you had a breakout green, and coming out of the other side of this, everything was teed up to have white the 1 minute lead to 5, and this just has a look to where the algorithm knew it was literally about to have a runaway to the upside, and they wanted to slam through stops one more time and then participate in the direction the market supply and demand wanted to take it. So let's see if they reverse this thing. Let's look at this 5 minute. It has a really artificial look to it. I mean, they could be going for the jugular to sweep through this stop one more time. Pre-market, but let's see. You can't really see that because of the this speed line that basically they're retesting a speed line. Let's take a look at something real quick. Click on that just so we can light up this speed line and figure out where this guy is coming from. Is that it? Yeah, that's it. Okay, so this is a speed line from 717, the morning of 717, and then off of the 718 high. And so what's happened here is we had a jump of a speed line. This is sort of like a miniature version of the Tesla melt up. So we jumped that speed line, came down and got support on it, and then looks like they're trying one more time here. The timing element, you know, hopefully you guys are seeing that this if you can understand how to properly draw these wedges, and again, you have to pay attention to that nesting volume bounce and then lower nesting volume. Otherwise, you're going to be you're going to have lines all over the place that don't correspond with any volume breakout. But you can see right here how nicely that worked. And so this was a red 6, and this was a red 866.21. So we're still looking for a green closing 5 minute bar with 997,000 shares or greater, and that'll that'll paint through this one, obviously, if it paints through this one here. So that's what we're looking for. Now, this definitely resolved bearishly, but again, look at this, that green bar that turned up right there. Let's look at that volume. 577. No, there was nothing impressive about that. So bear's still in control right here. It's real straightforward. We just need to see if we can at least paint a green, call it 870,000 share bar, but then to really take off to the upside and put a sort of a bottom behind us, it needs to look like this. Now, BAM shows zones of strength throughout the day, so I think we're going to head right back through this Friday high during the cash session today, and I see, and it looks to me like Ape will sell off, but you know, I'm not showing you how I come up with those zones of strength and weakness here, so I don't really want to talk about it too much in cheat. I want to basically show you guys how you can use volume, and then also just trend lines, hidden retest levels, and vibration to do a pretty good job of timing. I mean, of not only idea of price movement, but of the timing element based on these volume fractals. And again, even though that was, you know, probed well above that yellow downtrend line there, you can see that it's, you know, acting as pseudo resistance. Turned it down, turned it down, turned it down. And as I said, that's going to continue to be the case for, I don't know, another hour probably. So at least into the, it's 4:30, 5:36, you know, call it 2 hours. So really, you know, almost into the cash session. I haven't been paying attention to this. I was away from the microphone, but I don't know if you guys saw anything that caught your attention. Let's go look at where the low is in this, so we can start to set up another sort of some trend lines and stuff like that. So it looks like that was the low for the move. So we'll go ahead and throw together some. Yeah, that looks like a pretty decent trend line. We'll lock that in place. And then I don't really see anything too crazy as far as a trajectory, but let's just do this just for the heck of it and see if that comes into play later on. Okay. Let's see if we have a wedging, small degree, like a little brother type of wedging pattern here. We do. So point of origin high, spike high and resting volume, bounce, and 2 lower low bars. So we're going to have another one of these super steep. I mean, basically, this will be 5 or 10 minutes from now, and this will be ready to resolve. And let's go with this as far as nesting. Volume. So, you know, again, we usually start to lead a few bars ahead of the actual breakout, but the 4:43 my time, so 1, 2, you know, go back 2 bars. We're at 4:39, so from 4:31 to 4:33, let's see if we start to get an increase in volume. And then the really interesting thing will be if we're in for a really high volume session, even in the pre-market over the next 2 hours going into the cash market open, we'll see volume actually jump these two resistance lines, and you could get nesting volume up around 100 to 150,000 shares. Sort of like what you see here. Like if I were to say, if we were to say, where's the nesting or resting volume in this whole cluster of trading activity? I mean, it's really at 168,000 shares right there. You can see, right? So, that would be pretty intense. But we've already seen it during the first call it 5, 10, 15, 20, I'm sorry, 1, 2, 3, 4, 5, 6, 7, 8, 9. But the first 10 minutes of trading, we had nesting volume up around these levels. So again, if we start to really bring in volume over the next 2 hours, we can be probing above and then pulling back and nesting above the trend line. So it's the same as, treat it the same way you treat price, where resistance becomes support, that kind of thing, or at least you're looking for that. So we continue to do just a nasty bear crawl down the trend line here. And again, we know that this was an A, this is a B, so we know we have to do this a C, D, and E down the road. This one we already said was really kind of done back here based on how small, how short-lived that uptrend was. So I'm going to stub that off just so that this chart's not too noisy, especially as we start to move toward the opening bell. But this is our bogey, at least. So let's say we were scalp trading and using all of these techniques. If we see some positive reversal in volume, we basically have a almost a full dollar on even a scalp trade here. Somewhere in the low sixes, and then vibration, even if it only met vibration 692, that's a pretty nice trade. And vibration typically carries the price above the swing. So here's your A, B, C. You can find some interesting Fibonacci relationships between the swings above and below vibration, if you start to kind of dive into that a little bit more closely. Let's go ahead and snap a trend line here, because we could see a vibration sequence here that could give us a hint at the upside reversal. Go ahead and lock that in place. This is where we were originally looking for a reversal, and so we're still pretty much here we go on this small degree wedging pattern. So everything's still kind of the same time frame. This was definitely a interesting a move. And this is the kind of stuff where I think it's really worthwhile to drill down into the time and sales and everything else and study what that looks like. The algorithm that's run to create that kind of a bomb drop and wiping through stops. So we'll leave that guy alone. We know what we need over there. Let's see if we have anything interesting on the... I'll go ahead and leave this a little larger. Let's just leave that guy up there so that we can keep a close eye on this. So that's the pullback low right there in the 25 tick. You can see here they're still trying to pound this thing lower. You see that battleground right there where they started to bring some volume in and just aggressive algorithm there. Let's go look at that. 442.51 to 443.20. Hang on. That's too late. We can't see that. I think things are going to get pretty aggressive into the, especially the hour prior to the cash market open. I think you're going to see some things over here that you haven't seen before. We'll probably see a lot of freezing of the entire system, honestly, because, like I said, this isn't my, this is a public-facing computer, so it's not exactly a monster as far as the CPU and memory and everything else. 7,000. Okay, this has an algorithmic look to it here. Let's go ahead and throw a line in and just see if that sticks for a while. And when I say algorithmic look, I mean a winning algorithmic look. It's like this guy is winning. He's in control. I mean, it looks like that kind of a tight, relentless channel usually. So there's the green bar that's painting a red bar. So if you look at price, there's that's a decent looking candle setup on the second one, right? So your big thick red bar, nice probing wick, top of the range close, and then following it up with that one. But if you were to just being focused on that a bar alone, you don't really have a good sense that there's going to be another bullish bar to follow. But if we look down here at the volume, you can see that red bar 121.732. It gets painted by that 125.757. So, based on this alone, that's a pretty, has a pretty bullish look to it. I can see a hidden retest here that wasn't taken care of. So let's go ahead and get that in place, because that's another reason to see an upside reversal. So that's at, let's call it $6.30. So now we know we have this 692 in our sights. The reason why a hidden retest is always a good sign, kind of a gift when it shows up, is hidden retest levels in my work are fast market attack levels. So whereas a vibration level, the trading activity into vibration can be very choppy and slow and barely any trajectory to it at all, whereas hidden retest level, when price attacks it, you tend to see an aggressive bar, so a bar that's almost looks like this, but on the green side, so in other words, it has a sharp reversal look to it, which should catch people's attention. More than likely, we'll have some nice volume associated with it, and then that can sort of slingshot you from the low sixes toward this 692 vibration that we'll have our eye on today. But again, you can see the rising volume came sort of on time here. Right now we've got a 125.757 green, and you know, there's nothing that significant about it against some of this other stuff over here, but just in this one, if you were to just look in isolation at this volume fractal right here, then this is the leading indicator and saying that the bulls are in charge right here. So unless and until they paint through this with a red bar, we have to assume that the market's trying to bottom here, or AMC's trying to bottom here. Now there's going to be some, see them dropping, all layering in all these little slow cars in the middle of all this. Look, and then they bomb drop it with no slow cars in between the red prints. And it doesn't matter what they are, just when you can see them layered in like that, that's the indication that they're trying to slow down the speed of the advance or the decline. See, nice little Donnybrook here. This is, I mean, this is going to be a there's going to be a slugfest, and you're going to see a lot of cheating and totally bogus shit going on. But you know, regulators don't seem to care. So, like I've said, we play the hand we're dealt, and just look for your spots. I'm going to mute the mic for a minute here. You guys see this? And they went after some kid in a apartment in London for the May 2010 flash crash. I mean, can you believe this shit? Look at that. I mean, these are either big boys flexing or some algos breaking in front of your eyes. That's incredible. We'll have to go back and dissect this because this is an example of every either broken. Look at this, you guys. Look at this. You go from this, which I can guarantee you're not going to see that happen again in a long time, in front of your eyes, to this, to this. Look at this. And look at these bars. Excuse me. I'm going to mute the mic. I guess you guys probably noticed this volume bar over here on the 5-minute. You think we got our breakout? Let's take a look at that. Okay, so remember what we needed? Bulls needed a green volume bar of 997,000. Let's look and see what this is. You see how hard the algorithm is trying to either close this red or flat, because whoever wins this bar, they know this bar closes in 3 minutes. Whoever wins this bar and can close it either above the previous close. So I'll show you how this works. Previous close was $6.10. So these guys are the reason you're seeing this is because the bears do not want this to close above 610, and the bulls do not want it to close below 610 because they know, right? This volume bar has meaning. So everyone's going to be looking at this bar at the close. It's the same as if you were looking at daily closing bars here and you saw, an anomaly like this as far as volume. Forget about the absolute volume, just the volume compared to, relative to. Imagine if every one of these bars represented 1 day of trading. What would the importance of this day, the closing price of this day, what would the importance be to you if you know anything about volume and technicals? It's everything. So there's one more minute of fighting here. I'm gonna reduce this so we can look at the tick, because you're gonna see total chaos in that tick as they're trying to close above or below 610. And you can see the time right here, 5:04. Look at this. Look at that algo and look at this one. So the buying algo's definitely kicking the other guy's ass right now. But I would think that the bears will come in right at the tail end of this closing bar and try to slam it as hard as they can to 610. So watch this in real time. That's it. They closed it. Oh, my bad. They closed the bar, so that's it. So the bulls just pulled that off. But that explains why when we went back to I'm not going to jack this chart up, but when we went back to that crazy chaos, that right there is a huge victory for the bulls. And so we've got an hour and a half before the cash market starts to open. If the starts to trade rather, if the bulls are going to wrestle, look at this. Oh my gosh, look at this Donnybrook, you guys. If the bulls are going to, bears are going to wrestle control back away from the bulls, they've got a tall task. 5.249 million. And that's a 5-minute bar, ladies and gentlemen. That's what you call big boys rodeo. This is interesting though. So if you guys, if you think in terms of velocity, look at this 5-minute bar right here. Okay, that 5-minute bar was had a low of $4.43, a high of $7.12, and it was a 4.477 million share bar. So that's why it's deceptive when people equate absolute volume to velocity. It's not true. You saw how much time was spent with the bull bear algorithm, just fighting and thrashing and thrashing and thrashing. And so then it was only released and allowed to close higher in the very final seconds, the last 30 seconds, really. We could go back and look at it after the close and replay this video. But when you spend that much time slugging it out, you can't make this kind of price progress, even though you have this tremendous amount of volume. So this right here would be a really interesting bar to go back and study, and I'll do that. I'll probably make a whole video just about this one 5-minute bar, and we'll really dive deep and take a look at some of the games that were being played and how they do it. So here we had our tremendous volume breakout here too. So remember what I was saying earlier? Here we go. Remember I said if they can, explode to the upside in volume, then our resistance could become support, because nesting volume could start to track at that level. And look at it. That's exactly what's happening. So now whether or not they can hold that, or if this was just a moment in time because of this, huge bear versus bull battleground at, what did we say, 610? The price to me, to my mind, is not as important. In other words, some people would maybe go back and look at that 610 and say, that was the most important price for some reason. And they might be right. But the way my mind works is, since I'm comparing volume to volume, one bar to the next, the reason 610 was so significant was simply because this volume bar started to run really hot, and 610 was the closing price of the prior bar. So that became a battleground. Now, whether 610 is some magic number in a margin call or something like that, I don't know. I think that these guys just pick and choose spots occasionally to fight it out. It's like, hey, do you want to meet on the playground, or do you want to meet in an alley, or do you want to meet in your backyard? The fight's what's important, and who wins the fight. It's not where the fight takes place, if that makes any sense. So, and I might be completely wrong. There might be some huge significance to 610 that I don't really understand, or don't have a way to to get to. There might be something. You just never know. It could have something to do with anything. Anyway, there's our 630 retest level that we were saying is a fast market attack. See how fast that wick went up? Now, it just so happened that instead of getting follow through, they were battling at that 610. But so now we basically ignore any of this craziness that was going on, and we use we always use the same rules we've always used, which is retest becomes vibration, and that's what's happening. Despite the fact that these guys are, craziness is going on right now under the surface. but we don't care about that. This is why I ignore the news. I don't ever have the TV turned on to Bloomberg or CNBC or anything else. Boy, look at that. I'm telling you, we're going to go back and study this, and it's going to be incredible. Okay, everything's freezing up again. Look at that. Look at that chaos. It's starting to look a little bit more normal now. You see how this is looking more like it did early in the morning, and then you see chaos, and then here's just absolute mayhem. That right there. That right there, that's a crime scene. That's either a crime scene or a broken algo. And more likely a crime scene. Is that amazing or what? And then for it to just go, oh, and then, tell you what, if this is your heart, if this is what your EKG looks like, go get some help. I don't know what they'd call that. I should send that to a cardiologist and see what they think. I'm sure they would say the patient's not exactly healthy, but we all know that. So still a full hour in front of the trading session. Let's see if we can go back and look at some of the things we talked about over the past couple hours here. I mean, we're still looking for this 692 vibration C wave, and if you join the conversation late, this is the downtrend that we're tracking. This was the break, and it was a break that left behind a hidden retest level. So this leg on the break is the A. You come back down to hit the retest is the B, and then we've been in the B ever since. This is the bottom of the B so far, and we're looking for the C wave up to 692, and then a D, and then if we're going to melt up today, or at least move back above Friday's high, which I believe we will, our what I call a wilt buy candle will come on the cross of the E wave, and we'll be looking for a big tall 1 minute bar to paint green, and the middle of the bar to sit sort of the vibration would sit mid-range on what we call the Wilt bar, which is Wilt Chamberlain. Google it, you young guys. Pretty amazing guy. Boy, look at that volume. Oh, that's interesting. So on the 1 minute, they managed inside that bullish green 5 minute bar, they managed to paint 2.789 red volume. So what that means, that's on the wrong side of the screen. Hang on. So what that means is we're going to have to see a tremendous explosion in volume again to paint red, to paint a green bar through this red. So we need a 2.8 million. Let's look at the timing of that before everything's frozen. It's the system's totally frozen. Oops. Let's look at what time these were. 5:01, 5:02. So it was the first 2 minutes of this bar. And remember, the previous bar had closed at 6:10. So then this huge volume comes in the first 2 minutes of that bar. And then in the final 3 minutes, the bulls end up winning, which is interesting because they used all their firepower in the first 2 minutes of that bar. When you look at the drop off in volume for minute 3, 4, and 5 to close out that 5:05 a.m. PST bar, and it's a tremendous drop off in volume, but it looks like this person basically, if we're talking about war, used all their ammo. So basically, they used all their ammo in the first minute, and then they used a little bit here on the second minute. But then when the green started to win big, they basically just retreated, and they were out of ammo for the last 3 minutes. So that's interesting. Let me reduce this, and then I'm going to mute the mic and grab a little bit of food. And let you guys watch this. I'll be back in a minute. Well, this is some incredibly manipulative trading right here. And it makes me wonder whether I'm wrong about the importance of a certain level here. Because this could be repairing what they had to do over here. It's $5.99. It's literally 1 penny range, $5.99 to 6. I mean, it's just they're just wicks. There's no candle bodies down there or anything else. So I'd have to be, you know, later on when we dive down into what really happened during these two bars, the 5 to 5:01 a.m. bar and the 5:01 to 5:02 closing bar. When we see what was going on down here at the tick level, and even at the 15-second, 30-second level, it might reveal why $5.99 to $6 is causing this bar coding that you're seeing right here. And you see the wick above, the wick below. I mean, this is a smaller version of this crazy battle right there. And there's not really much volume involved, but it's there's just a lot of games going on. A lot of games going on. I'm going to mute the mic again and go update some stuff. That was a big, wow. You see how there are very few small cars on the road now? Slow cars, rather. Look at that. There's a whole block of slow cars. And then here they go again, just sprinkled in, buy some time, and then accelerate. It's a Donnybrook. I'm going to mute the mic.